Hi guys, today we will quickly go through a very quick situation analysis on the US macroeconomic environment. So to start with, we'll just go with the inflation, which has been and literally still is the highlight of most of the things the government is choosing to do. So inflation, we know peaked somewhere around June last year, so it was very high. It was somewhere around 9.1%, and since then it has been dropping, and currently we are at 6.5%. So as you can see here, as you can see here from the monthly data, it has been falling consistently, which is a good sign, but it's still not where the Fed wants it to be. The Fed wants the inflation rates to be somewhere around 2 to 3%. 2% is what they have said. So until we go to 2%, the Fed will not pivot. So what the pivot means, we'll quickly go through it one more time. So because inflation has been rising, or it was rising last year, and then now it's slowly since last June it has been falling. So to fight that, what the Federal Reserve or the Central Bank of America did was basically raise the interest rates. So when they started raising interest rates, they initially did zero point 0.5 basis points, that means 0.5%, or 0.75, which is 0.75%. So they've been doing very large interest rate hikes throughout 2022, and then for the first time in 2023 they went with a 0.25% increase in the Fed rates, or the interest rates. So this is the second thing about the macro environment. This is important because the Fed has, like I said before, they have been raising rates throughout 2022, but then eventually they have slowed the rates down, and right now it's only increasing by 0.25%. They have mentioned that they are looking to increase interest rates by another 2 or 3 times, and I'm not sure that it's 2 or 3 times, but it'll probably be around 2 more times, and it'll still be in small increments of like 0.25%. And then the Fed is aiming to hold those interest rates at that high level. The high level being right now, it's somewhere around 4.75%, the total Fed rate. They're looking to raise that to somewhere around 5.25 or 5%. So when they do go to that rate, that's where they will stop and pause raising interest rates. So that is actually a good sign, because we are closer to the end than we are closer to the beginning. So it's good that we are closer to the end of the Fed interest rate hike period, because from then onwards interest rates will probably stay consistent, and eventually by the end of this year or next year it'll start falling again, which is a good sign. So the second thing that I wanted to go through was the third thing, actually. The third thing is US GDP. So GDP is the gross domestic product, which is how we measure economic growth in countries. So there's real GDP and nominal GDP, but we don't really have to get into that. It's just inflation adjusted. But as we can see from this headline and most headlines that were published about this, the US GDP has been rising. It rose in the fourth quarter, which is actually a good sign. And I'm gonna get the next point onto this as well, which was the unemployment rate. So if you can look here, we can see that the unemployment rate is at 3.4%, and before it was 3.5, now it's 3.4. So GDP is basically recovering and rising. GDP is recovering and rising, and at the same time, unemployment is falling. This is a good sign, and on top of that, inflation is falling as well. So, this could potentially mean that we could avoid a recession in 2023, which is actually a bullish indicator. So, all of those things combined, which is GDP rising, good thing, unemployment falling, good thing, and inflation also falling, it's a good thing. So there is one thing to look out for on the 14th of February this year. The CPI data, or the inflation data for the month of January, will be coming out. If it comes below expected, meaning, let's say we are expecting somewhere around so last month, let me just pull this up. Yeah, last month it was 6.5. Let's say we are expecting 6, and then if it comes somewhere around 5.5, that will be an extremely bullish scenario. But if it does come in higher than 6.5, the markets could basically sell off again. So that was the macro outlook picture of basically what we are or where we are right now. And let's just go through a bit of technical analysis as well. And this is some trades that I'm looking to take coming up. This is not financial advice though. This is what I am doing. I am not a day trader because I have tried day trading. I don't really have the time for it and I wasn't profitable. And I cannot swing trade on like a lower time frame as well. So what I will be doing is I'm going to stick to the higher time frames because that is my strong point and that is how I made money in the Australian Stock Exchange as well, by sticking to the higher time frame. So that's exactly what I'm going to do. That's what I am comfortable with. So that's where I'm going to be speaking from. So I'm going to mainly use the day chart or the 4 hour, and I will also be using the 30-minute and 5-minute, but that's to get like the precise points. We don't have to go over this, maybe in a different video once I can prove that this is working for me and it's very profitable. That's when I will drop that video. So we'll just go over this. We are looking at TQQQ, which is a triple leverage Nasdaq ETF. What that means is, if the Nasdaq market, which is basically this, if this IXIC, which is the Nasdaq market, if it goes up by 1%, TQQQ, which is this, goes up by 3%, meaning it's triple leverage. For every 1% the Nasdaq moves, this will move by close to 3%. So it's triple leverage. So if you're looking at TQQQ, one good indicator is on the day chart, and even on most of the time frames here, this trend line, that's declining resistant trend line, has been broken on the somewhere on the 26th of January, and we broke above that, which is a good sign because for the first time in literally 1 year, we broke that level and we are moving higher. The only thing is I don't want to buy it right now because we are testing that 200 moving average, which is on a decline. So if we look here, from these recent highs to here, we've moved 51% in 33 days. And if you look very closely, it's been green, 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 green all the way up. Meaning this could potentially have a recorrection. This has moved. I'm not saying it has to have one. This could potentially have one. If we look at the 4-hour time frame, we can see that it has been grinding along the 20 moving average, and right now it's because I'm only saying that because if you look here, here, and basically after we broke above from here, we have been moving along with that 20 moving average on the 4-hour time frame, and right now it is a bit far from that, meaning what I'm thinking is they could potentially go this way and just meet or find support somewhere around this level, because as we can see here, somewhere around $24.18 to 20 cents is a major area of resistance, and now it'll probably turn into support, and that's potentially where the 20 MA will basically touch price again and move up. So that is where I'm looking to get in. I haven't set a proper stop loss yet because it will be dependent on the last low. So if we look here on the 4-hour time frame, it has been making higher highs, higher lows, higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, higher low. It could potentially basically come somewhere around here, that low. It could retest this level at around $24.20, which is, it would be healthy because even if you look at the 1-hour time frame, the 1-hour time frame has pretty much been going along the 50 moving average, which is the purple line. The 20 is the red line, the 50 is the 50 is the purple line, sorry. So if we look at this here, it has been grinding along the 50 MA, and right now it's a bit far away from the mean. It could potentially come and retest this. So in that scenario, I'm looking to get in somewhere around this area of previous resistance, which has now turned into support. So I don't want to buy here because it kind of looks overextended, as in what that means is it has been on a green rally for way too long, meaning it could potentially be corrected again. So I don't want to buy it here, and I don't want to short it because that would be against the trend. I'm not saying you shouldn't do that, but clearly we are in an uptrend because we're making higher highs and higher lows, and I don't want to go to the opposite team and short the market because that will only kill my portfolio. And one main thing for me is reversal trades always get me killed. So I'd rather not do that. I would rather move with the trend. So that is what I'm looking for TQQQ. And one more stock that I wanted to go over was NVDA, which is the semiconductor manufacturer, and basically GPU or VGA card manufacturer. They have been as basically rallying as well. And if you look here, I think I said this before, but I'll just say it again. Let me just draw that. This looks like a head and shoulders level, and right now we broke above that major area of resistance. It could basically retest it and then move higher. That's another trade that I'm looking forward to take. And let's just have a quick look at the crypto market as well. So same thing with crypto. From those lows of January 2nd, I think somewhere here, right now we are at a 41% gain since then within 35 days. So it has been rallying continuously, which is a bit of a red flag because if we look here, it has just rallied all the way up and there's no higher highs or higher lows. There is one specific area here. It kind of looks like the market was just breathing over there. So it was running up, took a bet, and then continues higher. And as you can see here, the buying pressure looks like it has slowed down. So I'm looking for a potential recorrection for crypto as well, but I'm gonna tell you this, and I'm gonna actually mean it. I don't trade crypto. I'm a long-term investor in it, and I haven't invested any money in crypto yet, because it's hasn't met my risk appetite yet. So anyway, if you look at this here, this would potentially be an area which you could somewhere around 21k is somewhere a range which kind of looks obvious if we only because if we look here, this looks like a potential area of resistance which could turn into support. So it could potentially come down here, take a breather, and then continue going up. Because like I said within the first few minutes of the video, the macro environment or the macroeconomic situation in the US is getting much better. And also another thing that I had to mention was China is reopening. They are easing on their restrictions, meaning more demand for American products, more demand for electricity, and that basically will help promote economic growth again, which is good. So because of all those factors, I'm not gonna jump the gun and say the bull market is over. But right now we are looking a bit bullish, but you got to be very careful. You should let the market do what it does, and you shouldn't be predicting what the market does. Predicting as in you shouldn't think that your opinion of the market is the right thing because the market will literally wreck you. It has wrecked me as well. So always go with the market, swim with the waves rather than against. That's one piece of advice that I can give because some of the mistakes I've made, you could potentially avoid that by trying to think that you are correct and the market is wrong. Do not do that. Swim with the waves, not against the waves. And yeah, I will leave it there. Hope you guys have a good one. Hope this was a bit informative. But if you find any value, like and subscribe. Just drop a comment down below. And yeah, I'll always respond. Have a good one, guys. See ya.